Hey everyone, this is Mark from Stocks and Cash. It's March 11th, 2018. I'm here with your market update, go over some of my holdings, and then show you some potential trade setups for tomorrow. So let's jump right in on the SPY. What a great day on Friday. Really hard to argue with results. Volume was pretty decent. Stokes are up, MACD is up, RSI is up. Huge white body, no wick really. We just pretty much opened up and ran throughout the day. So let's take a quick look at that, what we did on Friday. It'll be pretty clear. Here's the gap up. We never really closed below the low of the first 5-minute candle. We essentially just ran up all throughout the day, and what a great close. These last two candles, the last two 5-minute candles, big volume came in, big buys here. The market to me is looking very strong. Now, I did end up getting out of one of my calls. Let me go back to this view. The reason being is because I saw this as potential resistance, the wick of this candle on the 27th. So I thought that would be a good first target. I took profit on one of my calls, up 89% on that one. My second target here is this gap that you can see between the candle on the first and the candle on the second. There's a small gap, so I'd be looking at the 180 50 or so level to get on my second call. Now you can see there's a gap between the low of this candle and the 8 EMA. As I've said before, you know, the candlesticks like to stay relatively close to the 8 EMA in one way or another. Excuse me. So if you see back here, you know, we started trending up, got a little bit away from the 8 and moved sideways to come back to it. On this move, we had some air between the candle and the 8 EMA, pulled back and touched it and moved on again. So, you know, I'm not saying we'll move down necessarily, but I would expect, you know, a little bit of slight upwards to sideways movements as we continue on up. Now, it's possible we could get another nice big white candle. You know, the 8 EMA will catch up to this candle as we continue to rise, but you know, it doesn't like to get too far away from it is all I'm trying to say. So, you know, we had this run up here where we kind of stayed above and away from the 8 EMA, and then we had the correction. So it's certainly possible that we don't necessarily need to touch it as we're making our move up. But you're not going to see necessarily, you know, 5 or 6 of these candles in a row and have the 8 EMA kind of trailing and have a lot of space in between. So just keep an eye on the 8 and the candlesticks in relation to the candlesticks as you're monitoring the market. I definitely am bullish. I don't see us pulling back again. I really do suspect that we'll come back and test the all-time highs. Probably not necessarily this week. I'm thinking sometime next week or maybe the week after. So, but I do think all-time highs are in play. Let's take a look at the Qs. Similar to the SPY, they had a really great day, gapped up and ran. You can see the Qs actually broke out. New all-time highs on the Qs. Indicators are looking very bullish. The volume was pretty decent on the move as well. So I'm expecting the Qs to continue on higher. First target is 176.50 and the second target is 183.74. Now, one thing of note that we'll go into later, I have a lot of tech, both holding and I guess suggestions for tomorrow. So one key in my mind is to be diversified in your portfolio, because you don't want to be in all tech and have the tech sector go bad and you know you're red when other sectors are up. So in my mind, it's good to diversify. It's good to have a few holdings in each sector, or as best you can. You know, right now, as I mentioned, I have a few tech plays. I have MasterCard and I own the SPY. So you know, I'm a little diversified. Not as much as I'd like to be, but you know, you also have to play with the market's giving you, and right now tech is really popping. So you just want to be careful not to hold on to it too long and not to get into too much of it without having you know, kind of a backup plan, or having some other sectors that can offset any reversal in the tech pop, essentially. So just something to keep in mind. Let's take a look at some holdings here. MasterCard had a similar candle to the rest of the market, gapped up a bit, and then just, rallied throughout the day, melted up. We got to our first target, so I took one of my calls off, trying to take profit, and I'll get out of my second call if and when we get to our second target of 190 even or so, 189.89. Volume was very strong, and all the other indicators are looking bullish. I would like to see the MACD kind of pull away a bit more, kind of as what we saw back here. And, if we have another big strong candle like we did on Friday, then this will be a more pronounced MACD bullish move. So that's what I'm kind of looking for in MasterCard. And MasterCard, I am up 39%. Next one, Activision, up 54%. Again, took profits here. I own 3 calls, which I purchased on this candle here. We broke out, back tested the AEMA, tested it again, and then we finally took off on Thursday with nice follow through on Friday. So given that the market is strong, and if you look at these indicators, they're looking very bullish. I only got out of one of my calls. I bought 3, like I said, on this candle, and I'm holding 2 more, looking to get to my second target of 82.33. Intel, also a great day on Friday. We kind of back tested the breakout level here on Thursday, tested it again with a wick on Friday, and then took off from there. So I'm still holding my calls, looking for first target of 53.26 where I'll get out of one of my calls, and then 56.33 where I'll get out of the second. And then I also bought Microsoft at the end of the day. You can see it broke out on Friday. Strong candle, strong volume, strong indicators. So I thought Microsoft was a good buy, bought a couple calls, looking at taking my first profit at 99.43 and second at 103.71. Let's take a look at some potential trades on Monday. So these next 2, Apple and Bank of America, are trades you'd want to make towards the end of the day. Last 5 or 10 minutes. As long as you have a nice strong looking candle, these are 2 good potential plays in my opinion. So you can see back here on the 18th of January, we put in a high, came down, tested it back in late February, and now we're testing it again. So if we if we do get a breakout above 180.17, I see targets of 188.19 and then approximately 200 as a second target. So and you can see I drew this triangle which we broke out of on Friday. So I see that as a momentum type price movement. We're kind of consolidating here, and then boom, we pop out. So I think there could be certainly more to run on Apple in the coming days. I'm not saying we'll get to the first target this week, but it's certainly possible. I would think by sometime next week at the latest we will have touched the first target here of 188.19, and then we'll see if we can get to 198.53 in the coming weeks. And as I mentioned, Bank of America, BAC, very similar to Apple, put in a high, tested that high back in February. We're testing it again here, and if we get a close above it, it'd be worth getting in my opinion. First target 33.66, second target essentially $35. Now these next trades or potential trades setups I would get into potentially earlier in the day. I wouldn't necessarily wait till the end. This one's a little dicey, Facebook. The other ones are a little more clear. You can see that the indicators are very strong, but the candle that we had on Friday wasn't that big. I would have expected a stronger move given how strong the overall market is. We still technically have to contend with the high of this candle, which we haven't gotten through yet. So I may take it back what I just said, and this might be, Facebook might be something you want to get into at the end of the day as well, just to make sure we get over this resistance level. Now, because this candle was so small, you could potentially get in and put your stop right below the low of this candle. Or if you're doing the 5-minute rule, you could put your stop in at the low of the first 5-minute candle on Monday, if assuming that we close above it and keep running. But I would be a little cautious again because this wick could act as resistance on this candle from the 26th. But overall, I do expect Facebook to run up. There is some space between the low of this candle and the 8 EMA. So again, maybe some sideways movement before we start running up and retesting these highs of 195.32. So I would just be cautious on Facebook. But I do see a whole lot of potential if we do break out, all the way up to 214. We're currently at 185. So I mean that's about a $30 or so gain. So there's a whole lot of potential in my mind in Facebook. So something to keep in mind and watch. Next, JP Morgan broke out on Friday, which I unfortunately missed. It broke out earlier here on the 26th, but couldn't hold. Came back and tested the 55 EMA, and now we're back trying to break out again. Well, we did break out. So I think this is a first 5-minute candle type trade. I think JP Morgan is strong. 121 is the first target. 125.88 is the second target. PayPal also broke out on Friday, but you can see, kind of a dinky candle. We're still riding up the 8 EMA. Indicators are looking strong. Volume was, I guess a little average or so. But I would say that this wick is probably your first target, with this gap fill being the second target at 84. So the wick is at, the high is 82.17, and the low of this candle is 84.16. So you could play it that way until it comes back up to test, or you could just say, hey, I'm confident in PayPal, it's going to go all the way up. And you have low risk because you can put your stop at the low of one of these two candles here. You're not putting much risk on, and there's a whole lot of potential gain on PayPal. So normally I like to buy 2 months out in advance. Given that we're expiring March soon, that would be May calls. So you may even want to be looking at June calls on this particular trade if you're expecting to get all the way up to the second target, assuming the market cooperates. So something to keep in mind if you're expecting PayPal to run up over the next few weeks and months. On the other hand, if you're trying to play short term to this wick, the high of this wick, and filling this gap here, then May or maybe even April calls would suffice. So it just depends on what your time frame is. Couple more plays. Texas Instrument. I like the looks of this one. We popped through our warning area here, and there's a gap to be filled here. That would be my first target, 118.90, and then we would have to look for a breakout. So potentially you sell your second call at 120.71. It's tough because it's so close to it. Maybe you just hold on, or maybe you just get out of both calls at this the low of this candle here when it fills the gap, and then when you break out, then you buy some more calls and get in. Because you could hit this gap, fill it, and kind of pull back. You could hit the gap and fill it, and then hit this breakout level and pull back. So there is some resistance up here, but at least getting to that gap fill, I'm pretty confident in Texas Instruments. I like that play, and then getting back in once we have confirmation close above this breakout level here. And then lastly, NVDA. Pretty similar to Apple and Bank of America. Tested here, pulled back, tested again, pulled back, and now we're trying to get back above this 250 level essentially, trying to close above it. And if we do, then I see targets of 262 and 278. So just something to keep in mind with NVIDIA. I would think that MACD will cross over if we do get above this breakout level here. RSI is looking strong. Stokes are looking a little wonky here. They're kind of rolling. So you really want to see something more like this than kind of curving over. So NVIDIA is kind of a caution play, I would say, and certainly not something you want to get into until we have a confirmed breakout. And once we do get a breakout, I would assume these technicals would be looking much more bullish at that point. So again, just to reiterate, folks, diversify. That's something Jim Cramer says a lot, and I 100% agree with him. You don't want to be in a lot of, completely all tech. I mentioned a lot of tech names between NVDA and Facebook, Texas Instrument, and Apple. So just be careful what you get into. Pick the trades that look best to you and follow your trading plan, and you should have a lot of success. So, good luck trading. Have a great night, and we'll see you tomorrow.